Hello traders, congratulations on passing the mindset module. Now welcome to the plug and play strategies module, and we will start with an exciting one, which is a 5-minute strategy on gold. It uses some indicators, so bear with me. The first indicators that we are going to need for this strategy are the 13, the 21 and the 55 EMAs. I will explain you later how they are used, but for the moment just 13, 21, 55. If you want, you can color code the EMAs as I did here, because we will next talk about this indicator that is custom made. You will find the Pine script code in the video description. It basically calculates the stop losses of both sells and buys for a certain candle, but again, we will get into that in the next minutes. And the final indicator that we are going to need is the stochastic RSI with the default settings, the default trading view settings. Okay, now let's start with the EMA. So the 13 and 21 EMA basically serve as a direction indicator, meaning that when the 13 EMA is above the 21 EMA, we only look for buys. So when the light blue EMA is above the orange one, we look for buys. When the light blue is below the orange one, we look for sells. Ideally, we would like all the three EMAs being fanned out as they are now. Next, we are looking for a retracement to one of the orange, which is the 21 or the 55 EMA. After we have a retracement, we don't place pending orders. We basically wait for the price to confirm via some candlestick pattern that the price will continue going in the current trend. Now, when we enter, basically, let's take this long example. So as you can see, the EMAs are nicely crossed up. We have a nice pullback into all the EMAs. We have this dragonfly doji with a nice and with a nice wick to the downside, followed by a perfectly closed bullish candle. This would have been our entry right here. And the stop loss is basically calculated by the indicator that I showed you. It's right here. But how it works, it's basically $500, sorry, it's basically $0.5 below or above the current 14 candle average true range. So we are basically using the ATR as well, but I hid it because I made this custom indicator. Again, you can find it in the description. So for this candle, we are looking for the sell value when we retested the purple EMA, which is this one right here. It will be the second purple indicator right here. So as you can see, it will be 1923042. 1923042. Okay. Again, this indicator you can find, you will have four values. You have sell/buy. So the first two values are the stop losses if you sell at the retracement of the purple or of the orange EMA, and the next two are if you were to buy on the retracement of the purple or on the orange EMA. That's why I told you to color code your EMAs as I have them. And the target will be 2 to 1. And as you can see, this is close to being real market conditions right here, guys. So you can see that the market is moving. But this trade would have worked. I forgot something, the stochastic RSI. So yeah, I forgot something quite important. Disregard what I said up to now. You only enter trades if the conditions are met, if you have a pullback, and if you have a nice strong candle that indicates continuation of the current trend. Only if the stochastic RSI comes from below the 20 line, which is the oversold line, and the cross is up. So let's talk a bit about the stochastic RSI. So the 20 is the oversold, the 80 is the overbought. So again, just to recap, so if the light blue EMA is above the orange EMA, You look for buys, you look for retracements in either the orange or the purple EMA. When you have them, you look for a nice candlestick pattern that indicates that the trend will continue in the same direction. And you will need the added filter of the stochastic RSI being in the oversold area in case of a buy, and the cross being made to the upside. In this case, this would have been our entry. Stop loss again, $0.5 below the current ATR, which you have by using the indicator that I provided. So it would have been somewhere around this, and then you target 2 to 1. Okay, so this was a buy example. Now I will come back with a short example so that you can see how it works on the other side as well. Okay, regarding the sell example, as you can see, the light blue EMA is below the orange EMA and below the purple EMA. All the EMAs are nicely fanned out, indicating a start of a nice downtrend. The first condition is met. Now we have a retest on the orange EMA, followed by a nice bear engulfing candle, which confirms that the price will go in our direction. Second condition is met. Take a look at the stochastic RSI. As you can see, the stochastic RSI is in overbought conditions, which is perfect for us in case we're selling. We have the cross here as well. So the entry would have been this nice bearish candle. Stop loss again, as you can see on your left side, it would have been at 195,458. And again, we will target 2 to 1. Same thing applies. You could enter on the next candle as well, depending on your risk tolerance. So it would have been just fine if you entered on the next candle. I prefer this candle because it's close to being the top of the move. And as you can see, price would have gone your way even if you entered on this candle or on this candle. So this was the strategy, guys. Again, you can find the indicator in the description. If you have any comments, just post them and I will reply as quickly as possible. So let's move to the next one.